And welcome back, everyone, to another RLT Pivot podcast. My name is Tracy, and I am again joined with my amazing co-host, Mr. Dan Jansen. How are you doing, sir?
Doing awesome. Incredible to be back for another episode of the Real Life Trading Pivot podcast. This one I think is an interesting topic because it's something that I think we don't stop to think about for unless somebody brings it up or it's mentioned or something. But we're born, we live our life, and we act in certain ways that I don't think we really understand the psychological reason as to why. But in regards to finances and trading the markets and things like that, we get a huge influence from parents, from adults, just relatives that we're growing up around. And if, in a weird way, if the parents are not taking finances as seriously as they could be, or not educating themselves on what a stock market can do for somebody, or what investing can do in somebody, or how to try to get out of the paycheck to paycheck regime, a lot of times the kids, the offspring, they tend to fall into, they'll grow up and they tend to just kind of repeat what they know and they understand. So I think it's a very interesting topic. When you were growing up, Tracy, did you have any financial role model in your life?
Well, I had role models, financial role models. Were they good ones? No. So, first of all, my mother is extremely good with money. She's very good with money. The problem wasn't that she was good with money. The problem was that she never taught me how to be good with money. And I grew up in a home where you really weren't supposed to talk about money. It was a rude topic. It was something that you weren't supposed to discuss. And certainly, growing up in an era where kids were seen and not heard, that was very prevalent in my life. My father, on the other hand, was extremely irresponsible with money. You know, he was constantly spending, very selfish, very get us into trouble, lead us to bankruptcy, that type of thing. That was the role model that I had growing up. And then, of course, my example from them was also fighting about money, constant fight, constant battle. In fact, every argument that I can remember, with the exception of one, had to do with money. And that makes you grow up thinking, first of all, that money's bad, et cetera, et cetera, et cetera. And when I became an adult, I really had to learn all this stuff on my own. I had no idea how to budget. I had no idea what things cost. I just had to learn it all on my own. And thankfully I did. Had I learned it sooner, had I had a role model sooner, though, I tell you, the obstacles to get through would have been a lot easier, and I would have made some better decisions a lot earlier, and I would be financially in a better place right now. How about you?
Yeah, so no, interesting. I mean, kind of similar, but a little bit different. So I grew up, it was like middle class Long Island. So like Long Island, for the most part, a little more affluent than some other places, but middle class, still got high taxes, still got all that stuff. My parents, though, they were the saving generation. Like, they were, like, you hear the expression, like, make money and then let the money work for you. They were like, you know what, I'll do the work. Let's let the money rest. Let's give the day off to the money, right? So they were definitely putting money in CDs. They were saving. Like, they were not investors in some sense. But that being said, there was always a point where it was like, whether, and they both made good money and everything, but I think it was more of maybe some of the other parents of friends that I grew up with, like, those kids would have the newest clothes, newest video game system, newest stuff, and we had to wait for Christmas or birthday, and then we had to share the siblings and stuff like that. So it was always, it kind of made, to me, you saw the value of saving because you had everything that you needed, everything was provided, but like, the other kids just always seemed to have so much more physical, material items. And that kind of gave a little negative connotation to the saving aspect. And it goes, like, internally you go, well, I know if I work, I'll make money, I'll be able to save, and we could go that route. But I want the abundance. I want to be able to take the extra trip when I need to, and that kind of put me into I should be probably looking more into investing. The bigger problem was because my parents weren't investors, it was starting from day one as to how to go about like what actually is an investment. I was definitely the 17-year-old kid opening up a stockbroker firm, and my long-term investments was about 2 weeks long. And
Mm.
you don't have a lot of money at 17, so you're trying to move it from stock to stock, and you just kind of learn the hard way of even really what the difference is day trading and investing is, and why they're so important for each aspect, and not to combine them in the same accounts and things like that. And you kind of learn that at a young age, because I saw the value of investing, and I'd rather have the abundance to be able to provide in the future for myself, family, things like that. But I knew that working was backbreaking. It was long hours. It was you're able to pay your bills. You have more in the bank account, but you're not able to take that out to really be able to um, give that extra something that you might want before. So
Right.
it was very interesting, because I did learn about money at a young age, and pretty much all my life, of how to build it, how to grow it, and not spend foolishly. But it actually kind of threw me into to I really want to be an investor, and be able to let the money work, and let the money work and me take a day off. And it was just a very different perspective on it than probably my parents got.
So what was the catalyst that got you from moving out of the save, save, save into the investing part? Did you come up with that on your own, or was there an inspiration for that?
I think it was, for the most part, number one, I always found business attractive.
Mm.
It just it just one of those things that just kind of clicked with me, is just how, like, I knew a lot of my friends, their parents own businesses, things like that. So you kind of see them getting the newer car. You see them with a bigger house.
Hmm.
When we grew up, everything was kind of modest. So for me, that kind of appealed to me a little bit, where it's like, okay, if I'm able to run a business, I can make more money, and then you start to learn about, like, they have businesses, but they're also they also have investments. I think one of my friends, we were probably 15. His dad was buying, I think, and his dad owned a bunch of gas stations, so he was buying like BP stock, he was buying ExxonMobil stock, he was buying probably, I don't know, Honeywell or something like that, just a bunch of stuff. And he was telling me about it, and I was like, that doesn't make sense to me. I don't know what any of that means. Like, it was just a foreign language. But then you kind of relate that to seeing the lifestyle kind of that he had, and you're like, okay, so if I shift my mental aspect of to what money is, then maybe I could get to that point too,
Mm.
right? And but it wasn't. I never got the chance to sit down with anybody's parents and just really just dive into what they were doing. And again, appearances could be very different from reality. So it could have been, they were paycheck to paycheck because they were spending
Mm.
everything that they got. But at least from my point of view, it was very different.
Yeah. Well, good for you for being able to strive on your own and learn that lesson and make that shift, because that's usually that's the exception to the rule. I don't think that's the rule for most people. And even myself, I learned by watching my parents that because I wanted those things too. I wanted nice material things, and I wanted to have the games, and I wanted to have, the instruments and all the things that interest me. I wanted to be able to do that. And my parents didn't take us on vacations. They didn't take us out to restaurants. Like, we were very money just wasn't spent on us. We had roof over our head, we had food on the table, we had clothes on our back, and that was the extent of it. And that was acceptable. And that was what we should be grateful for that. And we grew up feeling that way. But in the same token, I also learned to have a really strong work ethic. And I would work, 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 work. And throughout my life, I've made good money. I've made good money. I've had good jobs. But no matter how hard I work, I'm always just over broke. And no matter how hard I work, one little thing that could just flip that all on its side, and that would change in a heartbeat. And that was the reality that I've lived in my whole life, is just you're waiting and make as long as everything works out perfect, you're good. But you can continue going and you can live your average life and you can do the things that you enjoy and you can get into a routine and you can go day to day to day to day. But like I said, if one thing comes, one little hiccup, I don't know how I would have even recovered from COVID had I not been trading, had I not had that switch before COVID, because I became a trader long before COVID hit. And had I still been in that working for a living, had I not had that financial knowledge and information that I now have today, I don't know how COVID would have, it might have been that straw that broke the camel's back and just flipped it all on its head and made all that hard work go out the window and start from scratch again. Just like a lot of people had issues in 2008 with the real estate market crash. There's a lot that was a huge pivotal change that a lot of people were not able to recover from. And so I think it's a primary example and a responsibility for each of us to take on the education and the learning of finances, to learn that in whatever way. But I think we also have a responsibility to teach our kids. Would you
Yep.
agree? You have two kids, right?
Yeah, I got two kids. Very young still, so
Mhm.
they're not investing. But I have started investing for them,
Right.
which again for me growing up, I think it was like my parents did save for me, right? And
Mhm.
they were big on CDs. Like they would always be moving money CD to CD. This one's up. We got to renew it to a different one, something like that. So they did that, and I was fortunate enough to have money saved for me when I got old enough. So I do want to do the same thing for the kids, but it's you just see the big difference as to, and everybody tells you start investing young, start
Mhm.
saving young, but like they don't really tell you what that is, right? So you're like, invest in what? Like, yeah, okay, what do I do?
Right.
And there's never like a clear cut answer, a clear class or lesson or something that you can learn. But life gives you its own hard knocks, and you kind of figure it out a little bit. So
Mhm.
I think whether you are a pure saver or if you are an investor, there's no wrong way. I mean, the fact is, they're both better than just spending foolishly, and
Mhm.
I think that's a huge thing. But if you're able to take money um, for a younger kid, which is what I'm looking to do now, is be able to put money into separate accounts. The stocks pull back. I'm buying things with dividends because they have a much bigger time frame now, and if they're able to see the value of that, and again, they're not going to comprehend. I think usually they'll come into the room when I'm trading and like, oh, well, especially when they were young, and like, what are you doing? And I was explaining the stock market to them in terms of ice cream. I was like, if this candle goes green, you get ice cream. If it goes red, no ice cream for a week. So, and they're like, oh, go green, go green. Like, but like, it's just the basics of what money does.
Yeah.
And I think once you have, like, once they're getting a little bit older, if they're able to see that they have a portfolio, they're able to see how it grows, see how it develops over time. I think even the basic lessons of how to invest and even the value of time will help rechange somebody's mindset as to what the possibilities are, as to
Mhm.
what the current reality is.
Right. Well, even having your kids around the charts gives them exposure. And I think that
Yeah.
there's the trading and investing aspect, but there's also the money aspect and understanding financial basics like budgeting, like even your relationship with money, understanding, what it takes, the value, how long it takes to earn it, how long it takes to spend it, all of those types of things. So I'm just curious, what age do you think is it appropriate to start educating your kids? Because they're not going to get this education through school. It just doesn't happen yet. But what age do you think it's appropriate to start educating your kids about money and having those conversations that I didn't have as a kid?
Yeah, so I don't think it's ever too early. I don't think I could pinpoint a different age or a certain particular age when it's appropriate for kids to start to learn finances.
Mhm.
Um, at least to the certain point as to when you verbalize it to them, right? So you could explain something to them or to anybody, but leading by example, I think, is typically the best solution, because if they're growing up in a household and all they see how you're growing and you're developing and how you built your lifestyle, it's that's their only reality that they really know, right? So they might not even, at a very young age, they might not know what Apple stock is, or they might not know what a I bond is, or how to use it, where to buy it, or any of that stuff. But they see that you're utilizing those tools to
Mm.
build your lifestyle, and you're able to provide them what their necessities, and that's just kind of a lesson that will grow on I think them naturally, and it gives them a better understanding of what money is. And I think that will spark interest, at least for them to be able to want to take that upon themselves to learn. And then now you can start to develop those conversations as to what you did, or start using some of your knowledge when the age is appropriate for them to start to dive deeper,
Mhm.
or start to invest their own money type situation.
Mhm. Absolutely. Now, I have some older kids, and I started our youngest anyway, um, started him with a bank card as early as I could. And first of all, I started with a bank account because he wasn't allowed to have a bank card until a little later. We had to have kind of a joint account, but it's started out with a bank account. And what we did is started him out with the idea of how hard it was. We needed to give him the idea of what money was, and what that means is how did it how much how hard was it to make it, and what do you do with it afterwards. So what we did was he got an allowance every month, and I don't necessarily like giving allowances for doing things around the house because, I want to teach them that you need to help out, and that's part of being in the group. You don't need to be paid for it, but in the same token, I wanted them to learn the valuation of money. So we opted to give him an allowance, but the rules were any money that he makes, 50% of it has to go into his savings account, and the other 50% he can use to spend in ways that he wants to spend. And so he's been saving since he was 10 or 11, and he's built up quite a nest egg. And from there, he's gone and invested some stock in Apple, which is nice. But the point that I'm trying to make is, in the process of doing this, he's learned, boy, I want this, and I only have this much money, and this next game costs like $100 or whatever, for the PlayStation, whatever it might be. I have to. That's like two more months of saving, or 3 more months of saving, or 4 more months of saving that I have to do. Do I really want this game, or can I forgo this game? So in the process, it's teaching him how to evaluate his wants and learning how to control those instead of having them impulsively control him. He's able to now look at them and go, okay, you know what? I don't really want to wait for this. This one I can't wait. How can I make more money right now? Or, yes, I can wait. I don't need this, and I'm going to let this time pass. And in another 3 or 4 months, maybe the price will come down, or maybe I won't want it anymore. So it's building in some of that spending control, which I think is extremely valuable. I never had that as a kid. I had the I had the feeling of being left behind. I had that feeling of lack of getting to the point where I have my own money now. Now I can finally fill all those needs that I never had as a kid, right? And I never learned that self-control. So of course, like a lot of other teenagers or young adults that get their first credit card, what do? You rack it up, and then you're like, "Oh, now what?" Right? And you're trying to recover from that. And I learned that lesson, and I recovered from it, and it never happened again. But I had to learn that lesson, and for a lot of people they don't learn that lesson. It just becomes a repetitive pattern. So I think learning that as a young person is really important, and that's the one of the things that we do with our son is he has to put half into his savings, and then the other half he can spend, and it's teaching him that lesson. So that's just a little tip that I wanted to offer, or a suggestion. Do you have any suggestions that you might want to offer to our community that they could do?
So what I would say is, like I said, I think a lot of it is lead by example. So I know this podcast is we try to gear it as much as possible to new traders or struggling traders, people getting in. Maybe some struggling traders are like, hey, the market's down 30% off the highs, and I want to throw the towel in. What I would say is keep going. The market is about longevity, and yes, right now the immediate benefit to you of trading is for your own financial future, but the intangible thing that you don't really see from trading. I mean, you could pull out money from your account today and go buy a car, house, or if it's really tanking and you only own the bad stocks, maybe a Snickers bar. Who knows? But at some point, by just continuing the process, keeping at it, the intangible thing that you actually you have the power to change your entire family's future, right? And not
Absolutely.
just current
Yeah.
family, but your kids, their kids, and you could actually be the one that could change the entire perspective and direction of to how your family lives the next 150 years.
Yeah, we're
That's
talking
some crazy
legacy
that
money.
that's crazy responsibility, but
Yeah.
it does start today. So
Yeah.
I would say it's never too young, and by you just going through the process each and every day, learning more, and everybody has excuses. I got a full-time job. I don't have time to learn. I don't have that much time to commit. If it's something that you want bad enough, today is the day, right?
Mhm.
You will make time. You have time to watch that show on Netflix. Is that going to provide a legacy for the family? Probably
Absolutely.
not. But you could dig out another hour somewhere to back trade or watch an online video of how to trade. And I will say, I mean, just being able to now, it's if somebody works that 9 to 5 job and they're like, man, I hate work right now. That child in the household, when you come home from work, they're going to see how the persona of somebody working that might not enjoy their career is when they get home from work. And that's going to be a negative connotation toward working and immediately puts it toward money. But if they see, okay, I'm growing, I'm building something, I'm working towards something, that now changes the perspective in a child's eyes as far as I work so that I could live, but the money I'm taking is not just paying the bills, but it's actually going into the future of providing the lifestyle that I would like to. It's a big difference. And right now in financial schools, or there is no financial schools, but in regular schools, they don't teach finance. You don't see day to day as far as, I mean, I think teachers should all get paid more money. I think they have a huge responsibility, but the teachers, they're not really getting paid that much right now. So they're not teaching, they're not teaching kids how to use money, spend money, invest money. They're focused on what they do, and they do a fantastic job. But it's just different. So if the kid could see
Mhm.
at home how money's working, and there's actually positive connotation to money and what it actually could do, I think that would change a lot of things. I think most kids' first aspect or first lesson in money, for the most part, comes from the tooth fairy. At
Exactly.
least for me. I mean, I think sometimes now they put toys or something like that. But
Uh,
the first time I think I received any money was underneath the pillow from the tooth fairy, and that I had to lose my tooth for that first. So my first thought with money is, okay, I have to provide pain in order to receive money.
yeah.
Think about
Oh,
that lifelong lesson. I mean, yeah, I'm
or
gonna
it
hate
comes
work.
or it comes magically from your ear or your nose, right?
That's
As
true.
you're
Yeah. If you have a
yeah, as
magician, I
you're
think that's why casinos are
yeah.
so popular. I don't know. But yeah,
Maybe.
it just we do have, I think, as a society, a very negative connotation on money in general, and I think
Yeah.
that we can't expect a, a school to change it. I don't think we could expect the government to change it. I don't think you could expect your parish or religion or it's going to start with you. It's going to start with you taking that first step forward down a very long path for the rest of your life. And if you're able to carve out an hour a week, a day, or whatever you have to start that journey, even something very basic will go a very long way.
Can you imagine the world that we would live in if everyone that was a parent right now did that little switch and took on the responsibility for educating their kids? with what they're capable of educating them with? Can you imagine, instead of putting the onus and the responsibility on the rest of society to teach them, can you imagine what changes could happen right now? It would be, I think it would be incredible, instead of
The
sitting there. Yeah.
the world will be in 100% different place. I mean, even some less fortunate people, maybe somebody that is losing a job that they have, even somebody that, I mean, we have hunger issues in the world, which is insane in this day and age. And a lot of the reason as to why you can't donate more is because, well, I don't have the abundance myself, right? When a plane's going down, they tell you to put your mask on first and then take care of everybody else. If you can't put the mask on yourself, you don't have the ability to now help. And if everybody was able to take that one little step, the next generation picks it up. I mean,
Huge
the
difference.
amount of people that will be living in abundance that has the ability to bring up other less fortunate people or other generations would just be, it would be absolutely life changing.
Yeah, for
World
sure.
changing.
Yeah. Now, if there are any parents out there that do want to get their kids involved in the education or trading education, they want trading education, we do have free resources on real life trading for kids. We've got a whole kids education program. So feel free to check it out. Like I said, it's all free. It's a great starting place. And that just opens the dialogue and creates more questions, and more questions creates more answers and more growth and all of that kind of stuff. So it's a place to start, and we wish you all the best. And Dan, do you give me one more second just to give us the or remind people of the challenge we've got going on, or do you want to give the challenge? What would you like?
Yeah, I mean, if you want to just go over the rules, but we do have a new challenge for this month, which the last day for submission for that will be the end of July. If you want to break down the details for that competition.
Yeah, so it's just know your number. So based on your back trading from the last challenge, we want you to know what your average win rate, what your win rate is, what your average winning R would be, what your average losing R would be, how many consecutive wins would you get in a row, how many consecutive losses would you get in a row. And if you want the full details, check back to the first episode we had this month. It goes into full details on that. But that is basically what it is. We want you to know your number and go from there. So we wish everybody the best. And Dan, thanks once again for co-hosting with me. It's always a pleasure.
Awesome seeing you guys again. And thank you guys for listening each and every week to the Real Life Trading Pivot podcast. Once again, any of that free content, you guys could go to reallifetrading.com. We have the links right below the videos as well. We also have additional courses, classes, mentorship groups, hand-holding. But one final word, it's not too late. Today is the day to start. You cannot build an entirely different future if you don't take that first step. So we will catch you guys all on the next Pivot podcast. See you guys then.